So this is the preview for the week beginning on February 29th to March 4th. We have February 29th, once every 4 years, and we have the beginning of a new month, which means top tier figures from all over the world. So before the month ends, long February, we have the European inflation figures, preliminary for February. Today we have the releases from Spain and from Germany, which feed into this figure, but it's still a big surprise what we'll have there. This is the last inflation report before the ECB's meeting. Very, very important. On Tuesday, March 1st, we have all the things that happened on the first day of the month. So it's Chinese PMIs. They have an impact on global growth, both the independent one, the Caixin one, and the official government one. And we have the Australian rate decision. RBA is not expected to change the rates from the current level of 2%. The Australian dollar is weak enough. The Australian economy is also doing okay. China is an issue, but inside other sectors are okay. Canadian GDP, it's a monthly GDP report. This time it's for the month of December, so it's the final one for 2015. Should be more interesting than the other ones. Let's see if it has a material impact, long-term impact on the Canadian dollar. And we have the first hint for the non-farm payrolls coming from the ISM manufacturing PMI. Remember, the last reports were bad. They showed that the manufacturing sector is, if you wish, in a recession in the United States. So services is okay, manufacturing is poor. Employment component is relevant for the non-farm payrolls report on Friday. On Wednesday, we have Australian GDP. Of course, an all-important figure for the Aussie dollar. And we have the second hint for the non-farm payrolls. We have the ADP NFP. It's only the private sector, but it's we have seen a good correlation between this number and the official NFP in recent reports. So that'll be another build-up. We have the oil inventories, as we have every week on Wednesday. Also, it has a big impact on the mood. Thursday, we have US jobless claims. Not so much as a hint as the next one, which is the ISM non-manufacturing PMI. The employment component of the services sector is considered a big hint towards the non-farm payrolls. Higher employment, hiring intentions mean usually a stronger report, okay? And on Friday, we have the Chinese trade balance as a warm-up. We all know that's important because of the level of imports and exports for the number 2 economy, and then a jobs report from the world's number 1 economy, the US non-farm payrolls. I don't have the expectations at this moment, but I believe they'll be a bit higher than last month's 151,000 jobs gained. And of course, as always, wages will be very important to watch over there. Not only the gain in jobs, but also the change in wages, which was quite positive in recent months. Okay, that's the report for February. All right, so these are the main events for next week, which is a very busy week. Anyway, okay, I see no more questions. So I want to thank everybody that came to the show today and throughout the week. I hope you enjoyed it. Any kind of feedback is, of course, welcome. And wish everybody a safe and successful trading day, as always. See you on Monday with a new week, new energy. Hope this positive market mood continues, and the figures today will also be positive, and volatility may be with you. Remember, when there's higher volatility, there's also more opportunities to make money, but more opportunities to lose money. At least what I'm happy to see, I think I mentioned a few times, is that Eurodollar is trading in a well-defined range. This does not always happen. But on this positive note, I want to thank everybody once again. Have a great weekend, a great trading day, and see you on Monday. Thank you, and bye-bye.